Demand is like 10x now. It's going to 20x. So the price should react accordingly. Even if that doesn't happen, you have the concept of the Veblen effect and the Veblen threshold. Veblen goods are what were theorized. Like a luxury good is valuable because it is valuable. As Bitcoin becomes more valuable, it just becomes more desired because it is valuable. And there's a threshold at which you cross. I think that threshold is probably parity with gold market cap, which is about $450,000 to $500,000 a coin.
In the dynamic world of Bitcoin, few voices resonate as strongly as that of Samson Mow. With a keen eye for market dynamics and a deep understanding of Bitcoin's potential, Mow's insights offer a compelling glimpse into the future of digital finance. Mow has previously worked as the Chief Strategy Officer of Blockstream and is currently the CEO of Jan3, the company working tirelessly to orange pill the world's leaders. In this conversation with Peter McCormack, Mow shares his perspective on the impending shifts in Bitcoin's value proposition, the significance of the Veblen threshold, and the evolving landscape of institutional adoption. Through his words, we navigate the complexities of Bitcoin's journey from a fringe asset to a mainstream financial instrument, exploring the implications for both investors and policymakers.
The thesis is so many things. I mean, the whole setup we have right now is perfect for a run-up. You have demand far outstripping supply and supply about to be cut. Halving is in a month and change. The ETFs alone are pulling in about 22,000. So given that exchanges have about 2.2 million, maybe less, like last note says 2.2, I think it's less. And the demand is like 3,000-4,000 a day, just from ETFs alone. That doesn't leave us a lot of time to drain that pool of Bitcoin. Demand is like 10x now. It's going to 20x. So the price should react accordingly. Even if that doesn't happen, you have the concept of the Veblen effect and the Veblen threshold. Veblen goods are what were theorized. Like a luxury good is valuable because it is valuable. As Bitcoin becomes more valuable, it just becomes more desired because it is valuable. And there's a threshold at which you cross. I think that threshold is probably parity with gold market cap, which is about $450,000 to $500,000 a coin. Once you cross that Veblen threshold, you start to demonetize gold because now this thing is gold. It's multi-trillion dollar, we're already trillion, but like $8 to $12 trillion market cap. Then you start to eat into gold because people see it as equivalent to gold. It's the new gold. And I think the media narratives will say the same thing. That's an important threshold when we pass gold. That's at the point at which gold starts dropping and people start moving the value if they stored in gold into Bitcoin. But it'll happen en masse when you outstrip gold. Rest in peace, Peter Schiff. This is why you need decentralization of a lot of things, especially mining. You need devs that are not all in one jurisdiction. You need miners that are not all in the US. And I think you need countries that are adopting it too. This is how you mitigate that risk. So I think the work we're doing at Jan3 to onboard nation states is critical because, BlackRock has a lot, US government has a lot, China has a lot, but let's get some into Argentina. Let's get some into, Brazil. Let's get some into India. And then it's a competition between BlackRock and nation states, which I think equals out that balance of power. But I think that threshold, the Veblen threshold, is where you start to see Apple moving. For a lot of people that are new to Bitcoin, it's hard to understand when you should go in. When you overtake gold, psychologically, you've crossed the barrier that this is the new gold. So like we talked about earlier, retail's not here yet because it's not high enough yet. Right? So you get it. You get it implicitly. It's not high enough. But at 0.1 M, it's high enough. It's looking like it, and it's not impossible. You're already seeing Omega candles in other markets, like in Egypt, in Turkey. We had a number of meetings last year, meeting with the president of Colombia, Suriname, Prime Minister of Montenegro. And this year, it's just trying to get some of those across the finish line, but I think the meetings are going to come easier now that the ETFs are approved. So we got those meetings before ETF, but post ETF, that whole landscape has changed. It's no longer a discussion like, well, Bitcoin is used by criminals, right? No, it's used by BlackRock. So it's the challenge. Like getting it practically implemented is difficult. And I think the biggest problem is they don't see the massive benefit to them because they're so enshrined in day-to-day operations, heads down, looking at immediate problems that they can't see a year or 2 years out, right? Like I was at the parliament here in the UK just for some meetings. Can't talk too much about it. But the talk yesterday was the budget, and there's no mention of Bitcoin in the budget. Cool. So, and I sat in on a few sessions, and they're talking about inflation and cost of living and all this stuff, and the answer is right there. But they're so heads down looking at the immediate problems that they can't see the solution just outside of view. I think it's going to be easier this year because the narrative has shifted. So many people still think of Bitcoin as a bad thing that enables bad things. But with the ETFs, I think the whole landscape has just changed. The conversation is different now. It's about an asset. It's not about drug money. It's an asset that's held by institutions. And it's going to be held by more institutions because I don't think people fully understand the magnitude of what the ETFs did. Now central banks can have Bitcoin exposure without having to hold the thing or get a custodian to hold the thing. Because if you look at the Swiss central bank, they've been buying stocks all over and they've been doing quite well. They can simply just buy the ETF. The way to look at it is the ETFs are just a doorway to the fiat economy and fiat system. That's it. Don't think too much of it. Don't hate it because it's custodied at something and they're maybe like Coinbase or whatever, but just treat that doorway as a good thing and let the market do its thing. That's the most important thing.
Today's video is sponsored by Stamp Seed. Don't store your Bitcoin in cold storage without stamping your seed phrase on an indestructible titanium plate. Stamp Seed is fireproof, rust-proof, impact-proof, and easy to hide. It has no loose parts and will give you ultimate peace of mind that your Bitcoin is safe and sound for the long term. Click the link in the description below for 15% off your stamping kit. Welcome to Bit Intelligence. We are committed to bringing you top-notch Bitcoin-only content, twice weekly. Doing this is quite a lot of work. If you are enjoying it and you'd like to support us in making more of these videos, subscribe to our channel and hit that bell icon. If you are willing to go a step further, consider contributing to our Lightning wallet on Geyser to help us get the funding we need to keep bringing you these videos. You can also join our channel here on YouTube for as low as $2.99 per month. Okay, back to the video.
You look at all the money printed, the trillions and trillions of dollars, $1 trillion in Canada. How can it not go up? If you think of Bitcoin, it's just a measuring stick with 21 million units on it. The reason why the number has to go up in fiat is because this thing is static. And you printed a lot more of those numbers, so it's got to reconcile to this somehow. You can change that number, print it, tweak this, cut this rate, increase that rate. It's all knobs and dials that you can just tweak. So it's not really crazy. And we're going to see this for dollars and pounds. That's why 1 million is not crazy. So we talked about how many sats every person in the world could have if equally distributed. 259, 259. Dollar sat parity means everyone in the world would have $260,000 of value. Is it crazy that everyone in the world can have $260,000 of value? House, car, blah. It's not crazy, right? And that would mean it's a dollar sat parity, $100 million a coin. So if you think about it, it's just disparity that prevents people from having that. But if you can stack sats, earn that same sat that a billionaire in the US can earn, eventually it'll mean that you will have a sizable amount of value. I think the next one, I don't know when it's going to happen, but it's likely it will happen, is going to make the previous one pale in comparison. It'll look like just like a couple kids in a schoolyard slapping each other. Because something has changed, which is Bitcoin has gone mainstream now. So you're going to have bigger players. I mean, back in the day, we thought Coinbase and Bitmain were big. But now you're going to have BlackRock and Fidelity. And what if they fall on the wrong side of the lines that are drawn? Maybe it's the fight to add the travel rule into Bitcoin itself.
As we conclude this conversation with Samson Mow, One thing is abundantly clear. Bitcoin is on the brink of monumental change. With the Veblen threshold looming on the horizon and institutional players entering the fray, the stage is set for a seismic shift in global finance. Mow's reflections compel us to reconsider Bitcoin's role not merely as a speculative asset, but as a transformative force reshaping the very foundations of our monetary systems. If you'd like to watch another video with Samson describing how his team at Jan3 are progressing with nation-state adoption, watch this video here. Thanks for tuning into our channel today. We'll see you next time.